Hello, friends. I hope you're feeling well, and wherever you are on this earth, your heart is joyful. In this video, I want to explain the meaning and concept of the advanced price action analysis technique known as RTM. But first, I want to talk about price action. And it's important to know that RTM is a method of super advanced price action. We'll also discuss the differences between RTM and the classical price action style. Essentially, price action is a method based on price data. In classical price action, we use price patterns, candlestick patterns, the arrangement of candlesticks, and the patterns they form. However, in advanced price action, we don't deal with candlesticks and the patterns they form, although we use them to identify the tricks of the big boys that are about to happen. We have four main methods in price action. One method is the wood price action, which is one of the oldest methods, but there isn't much information about it. Then there is Lance, which is quite old, and Mr. Lance Beggs wrote a book named after him, which greatly helped the trading community. Then there's the very famous method by A.L. Brooks, one of the most optimized and well-known methods in price action. Mr. Brooks was a disciple of Mr. Sam Seddon and Wyckoff, and he, like Mr. Lance, greatly assisted classical price action. But finally, our main method is the RTM method. RTM stands for Read the Market and was founded by Mr. If Mayante at the RTM Academy. When he deeply examined charts, he noticed certain tricks in the charts and understood that the big boys, as you know, always have large volume transactions and can't even fill their orders, whether for buying or selling, easily, not even with news. For this reason, they use certain tricks and take advantage of the stop losses of traders, using the liquidity necessary to fill their orders and reach their price targets. Therefore, he realized that smart money executes tricks inside the chart to provide the liquidity needed to move the market towards their desired price by hunting traders' stop losses and reaching their price target without incurring significant costs. Essentially, RTM's goal is for us to understand these tricks inside the chart. And through RTM, we align ourselves with the big boys and understand where the tricks are on the chart. And we must be mindful that with the factors we learn in RTM, we can understand these tricks and actually not fall into the traps of the big boys and not open trades when they want us to. The time to open trades in RTM is when we are aligned with the big boys. In RTM, there are many puzzles that help us understand the real direction of the chart. RTM is a style where we can recognize the tricks in the chart used by the big boys to reach their price target without the need for any indicators or patterns. But in the next video, I will talk in detail about the mechanism of how the big boys can use the stop losses of retail traders and classic patterns, which involves the same philosophy of fake levels. Fake levels are essentially fake support and resistance, which they create and hunt themselves, effectively misleading breakout traders and trend traders who trade with the trend and utilizing their stop losses to provide the necessary liquidity for the price. However, if Mayante says that in the RTM method, we don't need any indicators or tools, and by using historical market data and a set of factors we will learn, we can detect the big boys' movement signals. Essentially, Mr. If says that everything is in the price, meaning the best indicator we can use to determine price direction is the price itself. And the best indicator used in RTM is indeed the price index itself. In RTM, we understand what the price's current objective is and where it's heading. And by examining these three factors, we can find our entry point and move in the direction of the big boys. In fact, RTM is a method that doesn't require any indicators or tools, and we work with the price index itself. Identifying a series of puzzles, we learn to find the real direction of the price. The big boys always impose a price direction on retail traders, which is the fake direction, and trade in the opposite direction where retail traders' stop losses are set, using a series of tricks and creating fake levels and hunting liquidity levels. In the next video, I will precisely explain the exact mechanism of the fake philosophy and why and how they do this, and we will get familiar with the concepts of engulf and fake out in general, and an overview will be provided. In our training course, the concept and method of finding engulfs and fake outs will be addressed at the advanced and super advanced levels, and how to identify where an engulf or fake out should be disregarded. For now, we want to focus on the philosophy of fake levels and talk about it and understand how we find these tricks and what the purpose of these tricks is and how these tricks use the stop losses of retail traders as liquidity levels and move in the direction of market prices. I will present these topics to you, and God willing, in this educational journey, I will be with you fully with all these puzzles we are going to learn and help us identify the tricks of the big boys. I hope we can progress together on this path. And my constant motto is that we will all grow together. So don't forget to subscribe to the channel and stay with me until the end of this exciting training.